Everyone talks about what George Soros thinks about the market, but what about what he's doing with his billions? There's a profound shift in capital allocation underway, and his latest filings tell a compelling story. Today, we're diving deep into the 6 stocks Soros Fund Management has placed its biggest bets on, revealing the hidden gems and strategic plays almost nobody is talking about. This isn't about following the herd, it's about gaining an exclusive edge from a master of market timing. Let's dive in. First up is Standard Aero, Inc., ticker SARO. Soros Fund Management holds a substantial $84.87 million stake, signaling strong confidence in this critical aviation services provider. Standard Aero is a global leader in maintenance, repair, and overhaul, or MRO, for aircraft engines and airframes across business, commercial, military, and rotary wing sectors. The company recently reported stellar Q2 results, demonstrating 14% organic growth, propelled by a robust 14% increase in its commercial aftermarket business. Revenue surged 13.5% year-over-year to $1.53 billion, exceeding forecasts. Despite a slight EPS miss, net income skyrocketed to $67.7 million from $5.4 million previously, and adjusted EBITDA climbed over 20% to $204.6 million, pushing margins to 13.4%. Jefferies reiterated a buy rating, raising their price target to $40, impressed by strong profitability and an elevated adjusted EBITDA guidance for the year. With a full-year 2025 revenue guidance of $5.83 to $5.98 billion, and adjusted EBITDA of $775 to $795 million, even with tariff impacts, the outlook is bright. Barclays initiated coverage with an overweight rating and a $32 price target, highlighting its strong position in GE's narrow-body aftermarket, anticipating nearly $2 billion in incremental revenue from key engine types through the decade. Next on Soros's radar, with a massive $85.36 million stake, is Nvidia Corporation, ticker NVDA. No surprise here, Nvidia is the undisputed king of the AI revolution, designing the graphics processing units that power everything from gaming to generative AI. Their chips are the very backbone of the digital future. Nvidia recently announced the global rollout of its Drive AGX Thor developer kit, built on the cutting-edge Blackwell architecture. Key automakers like BYD, Volvo, and Li Auto, along with AV innovators, are rapidly adopting the Drive AGX Thor ecosystem. The company continues to solidify its dominance, unveiling the Rubin CPX GPU, designed for massive context inference in demanding AI applications, promising a 7.5 times performance increase. Financially, Nvidia reported record Q2 fiscal 2026 revenue of $46.7 billion, up 56% year-over-year, driven by a 17% sequential surge in its data center segment. Oracle's massive AI contracts directly validate the insatiable demand for Nvidia's hardware. With a $60 billion share repurchase authorization and projections for global data center spending to hit $3 to $4 trillion by 2030, Nvidia's trajectory is steep. Nvidia's strategic investments in quantum computing and continuous innovation ensure its pole position in the AI race. Before we move on further, what if your trading platform could do more than just execute orders? What if it could give you the deep dive tools you need to truly understand the market? With Moomoo, you get a platform built for serious traders. Forget bouncing between sites for insights. The Moomoo community connects you with over 26 million users to share strategies and trending stocks. Want to track the smart money? The Institutional Tracker lets you explore how top institutions like Berkshire Hathaway allocate their holdings across different sectors and specific stocks. And for true transparency, Moomoo offers exclusive data like insider trades. You get transparent access to insider holdings and trades, so you can see who's buying or selling, their position, and even the transaction price. When it comes to execution, Moomoo offers powerful tools like conditional and algo orders, which can auto-place a market or limit order when a specific price is reached. This is trading at the next level. The best part? Moomoo offers zero commission on stocks, options, and ETFs. Open a funded account, and new US users can get up to $1,000 in Nvidia shares with a qualifying deposit. Again, huge thanks to Moomoo.com for sponsoring this video. And now, back to the content. Moving on to a crucial infrastructure play, Soros Fund Management holds an $89.59 million stake in Nvidia Corporation, ticker ETR. This integrated energy company powers 3 million customers across Arkansas, Louisiana, Mississippi, and Texas, operating a diverse mix of natural gas, nuclear, and renewable power plants. Entergy recently secured regulatory approval to construct 3 combined-cycle combustion turbine facilities in Louisiana, primarily to support Meta Platforms' new global data center in Richland Parish. The company delivered strong Q2 2025 earnings, with adjusted EPS surpassing estimates and total revenues surging 12.7% year-over-year to $3.33 billion. Net income saw an astounding 856.9% increase. This financial muscle underpins an ambitious, expanded $40 billion capital expenditure plan through 2028, aimed at bolstering infrastructure for future growth. Entergy raised its long-term adjusted EPS projections, targeting up to $5.50 by 2028, reflecting confidence in sustained demand, particularly from industrial sales, which are projected to grow 13% annually. With a buy consensus and price targets up to $109, Entergy offers a resilient investment riding the massive wave of data center growth and electrification. Next, we look at AirCap Holdings NV, ticker AER, where Soros Fund Management has allocated a significant $95.53 million. AirCap isn't just another company. It's the world's largest owner of commercial aircraft and the undisputed leader in aviation leasing. The company just posted a blockbuster Q2 2025 with record GAAP net income of $1.259 billion, or $7.09 per share, significantly boosted by a $1 billion insurance payment for assets lost in Russia. Even adjusted net income exceeded expectations at $2.83 per share. This robust performance led management to raise its full-year 2025 adjusted EPS guidance to approximately $11.60. Despite a slight revenue miss, AirCap showcased strong financial health with a 36.93% net margin and 13.13% return on equity. AirCap is aggressively returning capital to shareholders with a new $750 million share repurchase program and a quarterly dividend. Operationally, a 97% lease extension rate underscores strong demand. With a robust order book focused on new technology narrow-body aircraft and plans to invest another $3 billion in new equipment, AirCap is primed for organic growth. Analyst sentiment is a strong buy, with price targets up to $134, reflecting confidence in this aviation titan. At number 2, with a $106.29 million stake from Soros Fund Management, is Salesforce Inc., ticker CRM. Salesforce is the undisputed giant in cloud-based customer relationship management, or CRM, software, providing the essential tools that help businesses find customers, close deals, and keep them happy. Salesforce recently delivered strong Q2 FY 2026 earnings, beating expectations with an EPS of $2.91 on revenue of $10.25 billion, a 10% year-over-year increase. This marks its 10th consecutive quarter of non-GAAP operating margin expansion, hitting 34.3%. The company also raised its full-year fiscal 2026 revenue guidance to over $41 billion. This growth is largely fueled by its aggressive pivot into agentic AI and the explosive growth of its data cloud and AI offerings, which saw over $1.2 billion in annual recurring revenue in Q2, a remarkable 120% surge. The Agentforce platform, designed for autonomous AI agents, is rapidly gaining traction with over 12,500 deals closed. Salesforce is strategically embedding AI across all its core clouds and integrating it with MuleSoft, Tableau, and Slack to enhance automation. While some analysts express caution over growth sustainability and LLM agent accuracy concerns, the consensus remains a buy, with average price targets around $332 to $333, signaling significant upside. And finally, the top stock in George Soros's high-conviction portfolio, with an impressive $123.77 million stake, is Interactive Brokers Group, Incorporated, ticker IBKR. Interactive Brokers is a global online brokerage powerhouse, providing institutional and professional traders with an integrated platform to trade an unparalleled range of products: stocks, options, futures, currencies, bonds, gold, and crypto. The company recently showcased robust Q2 2025 results, with diluted EPS of 0.51 and net revenues hitting $1.48 billion, a strong 20.3% year-over-year increase. This surge was driven by a 27% rise in commission revenue from heightened trading volumes and a 9% increase in net interest income. IBKR's pre-tax profit margin expanded impressively to 75%. Customer growth is outstanding, with client accounts up 32% year-on-year to 3.87 million, and customer equity climbing 34% to $664.6 billion. A key strategic move was the 4-for-1 stock split, aimed at broadening retail investor participation. Analysts maintain a moderate buy, with price targets up to $75, confident in sustained EPS growth. While interest rate cuts pose a potential headwind to net interest income, IBKR's aggressive growth and tech-forward approach position it for continued leadership. Now, looking at the numbers, it's clear why Soros has picked this diverse group. Interactive Brokers immediately jumps out with a staggering 94.25% gross margin, a true testament to its asset-light, highly profitable brokerage model, far exceeding its peers. Salesforce isn't far behind at nearly 70%, showcasing the incredible profitability of cloud software, while Nvidia, the AI juggernaut, commands an almost identical 69.85% margin, reflecting its essential, high-value chip technology. In terms of sheer scale, Nvidia is the colossus with a $4.3 trillion market cap and $130 billion in revenue, dwarfing all others, a clear indication of its market dominance. Salesforce also stands strong with a $231 billion market cap. AirCap, while smaller at $22 billion, delivers an impressive 16.05 earnings per share, the highest on this list, demonstrating its exceptional profitability, largely driven by strategic asset management and recent windfalls. Entergy, a utility, shows consistent earnings at $4.02 per share, reflecting its stable, essential service. Standard Aero, a critical MRO provider, shows solid growth metrics for its sector, with a positive EPS of 40 cents. Noticeably, none of these Soros picks currently pay a dividend, signaling a focus on reinvesting profits back into high-growth opportunities rather than shareholder distributions. This portfolio truly reflects a blend of market leadership, high-margin operations, and strategic infrastructure plays. So, there you have it. 6 high-conviction stocks where billionaire George Soros has placed his bets. Which of these Soros-backed companies do you think offers the most compelling investment case for the next 5 years? Drop your thoughts, insights, and predictions in the comments section below. And here are 8 AI stocks hit with new analyst ratings. Click here to watch now.